Stocks to buy in September 2023 edition. Welcome to the Barry Charles. Yes, your one-stop shop for everything finance, real estate related, stocks, investing, everything in between. This is the channel for you. Yes, how are you doing today? Are you ready for a bamboozle of 3 stocks that might help you become more richer? Not financial advice. We have a racing car versus the cruise ship and the electric vehicle, all put into one with the 3 stocks we're going to look at today. So get yourselves geared up and ready to rock, because you're going to learn about some of these stocks and where a possibility to maybe get yourself some financial freedom along the way. Let's get to it. First off, as we rev up the engine, yes, Ford Motor Group Company is the first stock we're going to talk about today. There's the potential for decent returns. It hasn't been a good return for the last 5 years or even longer, but it's the tide about to turn as they go on a bit of a growth spurt forward, but they're also in big debt. So that is the question mark you're going to have to decide for yourself at home. But let's have a look at Ford at the moment. They have to work on their profitability. That's clearly been an issue for Ford. They've been up and down like a yo-yo, up and down. They're going to have to change that if they want to continue to make you some good moolah. Let's just have a look at a few positives for Ford. 5% dividend currently. That's a very good buy out there. I think 5% dividend just for that. And where the stock price is, I think you'll be pretty good there. 47 billion market cap. Ford is turning into an EV company, so that's what you've got to understand. They still have their GT Mustangs and stuff like that going along, but they're moving towards something new. So it'll be interesting to see how they go. Interesting is the move with them and General Motors to join the Tesla fleet on the superchargers. So they are going to, instead of having that old standard one that they used to have, they're taking Tesla's one on. There's going to be more that's going to happen. Tesla getting more of a monopoly. So it's going to be interesting to see if that'll help Tesla's bottom line, because Tesla at the moment, that the chargers are not really making them much money. But they could skyrocket here if they get more and more companies joining onto their fleet. Ford, if you look at the stock price and you look at value metrics, this stock could easily be $45. Now, people go, what? Are you kidding me? Well, on all the value metrics on what it earns and everything, there should be $45 even more, if we just look at your valuation alone. But that's clearly not the case, because there's not value anywhere near that. At this stage, are people getting it wrong? Because what Ford reminds me of, and same with Meta, there's 2 stocks, there's more stocks in it, but these 2 stocks that are always undervalued virtually all the time. Like even Meta, it is going up to where it is, it's still undervalued. It's easily a $400 stock, if not more, on value. You could argue it's nearly $600 for some people, but between $400 and $600, so it's still way undervalued on current metrics in this. And it's just with Meta and Ford and some other companies, they just get to a certain stage and they just can't go any higher, because some of Wall Street just not convicted in. They hate the stock. That's the thing. They hate Ford. They hate Meta. Some people do. It's just the way it is with some companies, and some companies are really overvalued. And when this one company is still overvalued, it's going down. I'm going to talk about it later, but it still could be a good buy now, because this stock is normally overvalued. Well, I mean, in recent history, in the last couple of years. But we'll get to that later. Stay around for that EV one. I know you love this one, so we'll get to that later. But yeah, Ford. What do they have to do? Well, they're obviously growing with electric vehicles. So to give you a stat, in 2022, it was 62,000. 1 year later, 10 times that, 600,000 vehicles. Now, boom, and then they expect to go to 1 million. So they are really pushing the EV train. So that is a positive for growth. But you're losing $3 billion this year from that. So you've got to scratch your head sometimes. But at the moment, they're actually profitable for the year if that continues. And the profitability of this company, 1 year it's great, and then there's a net loss, then it's great, and then there's a net loss. That's why investors aren't staying true. They're doing some cost cutting at the moment with their Mustang Mach-E, with each one having 5,000 less off per vehicle and cost cutting. So interesting move there. They're also going to a less expensive lithium iron phosphate battery, so they are starting to look at cutting costs. So if you're looking at those metrics, it looks like good value, but there's a big if with the stock. Big if, and this is the question you have to decide for yourself, is if it's worth buying this company or not, and that's the debt. Yep, the debt of this company is not good. $93 billion. Yes, $93 billion is what this one's about with Ford. Is it worth a buy? Well, that's the question you've got to ask you. $93 billion with a cash flow of what? Around $6 billion expected, and it was a net loss last year. I mean, there's a lot of issues with Ford. A lot of issues. They're going to have to really push to get that going forward with Ford. I think so. Ford is one of those ones that it could go to 45, but it could go to 45 in 10 years, 20 years. It's just one of those stocks that just seems to always be undervalued. And with it being a dividend stock, that sort of is what happens because of it's not going up. But there's a chance it's really going to grow next year. Now it's about getting their profitability. They're growing and getting their profitability. That's the thing you got to think with Ford. And is it going to be sustained growth and they're going to continue, or they're just going to be in the middle of the field with the rest of the auto? That's what you got to think. Are they going to invest and push Tesla, or they're just going to be a roundabout company? That's probably the question mark you got to have on Ford. But at current metrics, Ford could easily be a $20 stock, easily, even on current value. But it's just not getting any budge anywhere towards that. And that's the question you've got to decide at home if you think that is an opportunity to buy or not. Well, let's go to the second stock up in this video, Royal Caribbean. Well, they're all talking about PayPal as a value stock. Well, this stock could be even more value than PayPal right now. But there is a bit of a caveat to this, obviously, because there's more issues with a cruise line because they're reliant on people having a holiday. That is the big question mark about buying the stock. And I'm saying stocks to buy because they are valued at the moment. That doesn't mean it's going to be value long term, but very much good value right here, right now. Royal Caribbean. Yes, now, this stock on current metrics could easily be $170 stock on what it's doing right now. Not financial advice, but on current metrics, it could easily be double the worth of the stock. But where the positives we've had is that the free cash flow is coming and they're getting close to returning to profitability and cash flow. They've got there from -5 billion in 2020 to around 2 billion in 2022. And they're expecting to get near profitability in 2024. The only issue they have, clearly, is that if we have another recession, that goes back down again. Loan. At the moment, interest rates are high. That's an issue you have with Royal Caribbean. It's already gone on a nice run. So that's the risk you take, but it's still value for money right now. If everything continues to go rosy, this is a great stock to buy. You could wait for a dip, and if it drops in half, buy it all day. But the question mark with any of these cruise line companies, will they go bust if we have another big recession? That is the question mark about any of these stocks, and that's why paying a too rich a value, that is the risk reward you got to look at with a stock like this. Is it worth that risk? Do you want to just take a softer risk like a Visa and take the 10% each year sort of stock? That's the thing where Royal Caribbean can go up 100% or could drop 50%. So that's sort of the risk rewards when you go into individual stocks. But yes, Royal Caribbean. But it's been very positive of late. I see this company being a very interesting cash flow machine. They got debt, obviously, that they got to pay off. There's a lot of issues with debt with these companies, but they always have had issues. But with the high interest rate, they'll cut down the bottom line. So Royal Caribbean to me is definitely a stock you should look at and consider about buying. Let's get to the last stock on this list, Tesla. Yes, Tesla. What's happening with this stock? Crashing down to near $200. And to be honest, it's still overvalued. Doesn't mean it's not overvalued for the future, but on current metrics, it should probably be around $120. So it's still halfway to go, or at least 40% down. before we start to get to real sort of value for money on its intrinsic value. Future doesn't mean it's going to go flying more higher, but Tesla's just one of those dangerous companies at the moment. Is it worth buying now, or is it going to keep going lower? It could skyrocket again and up. That's the thing with Tesla, when it moves big time. So if you got faith that it's going to go back up to go to 400 one day, you buy all day. Do you think it's going to go to 1,000 again? I don't think so. Not at this time. I mean, they're going to have to really do something impressive to really push their bet. Obviously, Cybertruck. This is a very hyped stock. Like, this is a stock that ebbs and flows. Where there's more solid stocks out there, and they keeping on. But yes, it's going to be interesting to see what happens with Tesla with their future. But obviously, they're having positives of more companies taking on their charges, so that's some profitability there. Are they going to get more money coming from their solar business, all that sort of stuff? Elon Musk is obviously the big issue here with Tesla. That's the biggest issue I think a lot of people are having. Is he really running the company anymore? Is he going to stay the CEO? Is someone else going to take over? That's all question marks hanging over this company, and I think that's why a lot of people are getting a big question mark that maybe he will leave. It won't be the CEO anymore as he focuses on his other endeavors like X and SpaceX and that. So it's going to be interesting how he plays this, if he is going to get back more involved with Tesla. He's obviously involved, but not as involved as he was. So it's going to be interesting to see how that one goes. Yeah, to me, you want to get Tesla lower, but still at this sort of prices, that's a good entry price. Not a fantastic entry price, but it's definitely a stock you can consider buying now in September, and especially if it keeps continuing to drop. It's very good value for money. But if it goes up quickly, I'd probably leave it. But if you are a Tesla investor long term, it's definitely worth considering buying now with the decent drop. You're probably wanting a little bit more value before you. But anyway, that's the 3 stocks to buy. September edition 2023. Remember to like and subscribe to the channel, and share this video with all your friends, and I'll be back for another video soon.